Well, thank you very much, Graham. Thank you, Chairman. And shifting frontier, and like I think a few other speakers, my talk shifted a little bit over the last few days and weeks as the markets have continued to keep us absorbed and occupied. As Graham said, this is a gathering of explorationists and also a gathering, I think, of junior companies. And I think you guys are absolutely key to the future of global supply of minerals, and you are also going through very tough times, which I'll go into a little bit. I won't dwell on it too much because I think you all know about it far better than I do. But I want to sort of move beyond saying we feel your pain, because we're feeling the pain as well. We've got plenty of equities which are being marked down heavily at the moment, but to sort of think more carefully what we can do about it, particularly in the context of frontier countries which are becoming more and more important as one pushes out in the search for new reserves. So I've got rather a lot of slides, and I'm going to spin through a lot of them because I would love to have time for Q&A. So forgive me if I skip over them. I should have asked the chairman. I'm sure the presentation is available electronically later if you guys want to see it, or hard copy. Okay, so I'm going to cover the market context quickly, and then talk a bit about the frontier, what challenges it poses, and how one might deal with them, and particularly talk about partnership and a strong partner, what IFC can offer in that respect, but also others more generally. I think it's a period of time for partnerships, the right partnerships. So the global demand and supply picture. I mean, I think the key thing here is this is the projection and the China story which we've heard endlessly over the last couple of years. I think the key thing here is what's going to happen. What's going to happen is this forecast right? I mean, it's a Citigroup and World Bank, but who knows? What's going to happen now after the post-credit crunch and post global slump? Is this going to happen? My view is that China and the BRICS are going to continue to be key, but will demand increase that fast? But as I'll go on to say, I think it's my feeling that the big interesting question is the supply story, and this is where you guys are so key. And what this shows is that here are the juniors, and who's doing all the exploring? You guys. And so, are you going to be able to keep going and keep this pace going, which I think is key for the global future and for development, which is what we're worried about. So this is what's been happening recently, which, as I say, I won't dwell on this too long because you guys know all about it. 25%. This is AIM-listed companies, as you see. 80% of the mining sector is within 25% of its 52-week low, and only 5% are within 25% of its 52-week high. And that's what that shows. Now, as we all know, most of AIM and most of you guys are explorers. This split is, I don't think we would claim too much science about this. This was a fairly quick run through the websites of most of the mining companies. A lot of you guys we know, but we don't claim to know all of you. And it was very much just taking a judgment on whether you would call him an explorer. Producer is probably a bit of a stretch, developer stroke producer. What we were looking for was to see whether there was a sharp difference in the share price performance of the development explorer producer end as against the explorers. There's a bit of a pattern. There's 50-50 explorers producers, and then 72-28 for the low price here. But it's not a huge story. I mean, I think what's happening is everybody's getting beaten up. Who will recover first? It'll probably be easier for the guys who can show early cash flow and the production guys. But we'll have to see. So that's the story there. And as I say, this is all too familiar. The 18 lowest performers, some are down near, sort of 10% of their January 2007. We chose this because this was well pre-credit crunch, and you probably remember back to those halcyon days when everybody was talking about the global super cycle going on forever. But the interesting thing is what's happened to commodity prices. If you this is the credit crunch line. Since then, as you know, commodity prices have held up very well until recently, and they started to dip. But of course, gold sprung back like crazy, and so has oil. And who knows? Is this right or isn't it? Maybe gold and oil are going to do this, and the others do that. I personally think that gold, I don't know. I don't think oil's rally is going to be sustained. I think it's mainly people, selling dollars and and buying oil and gold at the moment. But we'll see. But the key thing is that this has happened. Some of these are producers, and some have managed to keep going. But it's been a sad story on share prices. The interesting thing, though, is in the midst of this share price performance, there continued to be a reasonable number of listings and amounts raised. This is a slightly confusing chart, but it isn't actually meant to show anything clear-cut. I mean, that's the point about it. The red is the number of listings, just 6 there, and 8 and so on. And this is on the right-hand side. This is the amount raised, average amount per listing. Some of you may be aware. Recently, I think it was just into July, about middle of July. Sunkar Resources, a Kazakh operated group, listed. They got quite a well-developed resource, and they raised 30 million. Their share price has really tanked since, but they got the money in. And so even with prices doing in the world economy doing what they're doing, it's surprising in a way how many listings have taken place. I mean, my own view on that is that it is a little bit of a broker pushed and maybe a shareholder push, supply push onto listings, which I don't actually think is doing the share prices of the rest of those listed any good. I think there's a supply momentum there, which is in a mindset of, as I say, initial shareholders and suppliers. It's all about put in some seed capital, get your broker and get listed. And I'm not sure that that's the smart way to go. Well, as I say, it did Sunkar Resources quite well, but whether it's done their shareholders a lot of good, we'll have to see. What one is one is seeing the numbers dropping, but it is an interesting story, that one, I think. Now, on the finance side, when you found something and you're getting into the production stage, here there's a much clearer story. This is the volume of syndications raised, syndicated loans, syndicated finance raised globally for larger and smaller companies. Probably the bulk of it is larger. What you're seeing, credit crunch, and then fell away. Then, if you remember, earlier this year, people thought, we were working through it, the things picked up, and then things deteriorated again. And, that's the number, similar pattern. This is up to Q3. We have colleagues on our IFC syndication group here in London in the office with us. They follow the market on a daily basis, talking to banks and so on. I'm afraid it really has got very, very grim. I mean, last week things pretty much seized up, and we talk to banks all the time. I mean, the interesting thing is, spreads have widened, liquidity's tightened, front-end fees and all those sorts of things are going up. What you'll probably find, though, is that, which is good news, I think, for mining development, is that I think, the sensible banks, at least, and I think most of them, they realise that with regard to the period that they'll lend, if they're lending for a long-term project, whether they lend 6-year money or 8-year money, isn't really going to affect them. I mean, the turmoil and the risks they're facing are really over the next, probably 2 years. And so I think if you can make the case for a project, you're not probably going to be stuck with a bank saying, oh, well, we like your project, we'll only lend to you for 3 years. They'll probably say, if we lend to you, we'll lend to you for a sensible period of time. So I think, there's that aspect is, I think, encouraging. This is the famous now credit default swaps, which I think all of us pretend to understand. Maybe not everybody does, but we all know about. These are for a series of countries which perhaps are more at the heavy end of the risk spectrum. And as you can see, some have taken off spectacularly, but the red line is the average, and a steady rise. And this is up to the 9th of September, and we couldn't get the data for the end in time to put it on the chart, but I suspect it's done something like that. It's not only in the high-risk countries. Proportionately, CDS has gone up quite sharply. The spreads, in China, that's in percentage terms, that's quite a sharp increase. And this is China with huge reserves, massive balance sheet. Japan, I mean, look at that, more than doubled. The UK, we all know what's happened to the UK economy. Surprise, surprise, that's more than doubled. Australia, for some curious reason, I think probably because it's a commodity-based economy largely, it's narrowed a bit. So that that's all a pattern on the financing scene. I better move on quickly. So this is pretty much what we were talking about. As I say, I think the key thing that I want to keep in mind is global supply may be more constrained than demand because of the plight of the explorationists and exploration and the flight's quality. People aren't prepared to put risk money in, which I think is irrational if you sit down and think about it, because exploration and long-term development are for the economy in 4 or 5 years' time, and hopefully we're largely through this. But that's not how people are seeing it now. It's liquidity. So frontier countries, this is the other aspect that I was mentioning at the beginning, that there's the push to find more reserves and more and more difficult countries, and countries which in the past you've avoided. This is the yellow, as you see, is AIM-listed companies working in this region. This adds up to more than 100% because a lot of companies are working in more than one region. But the key thing is that 64% of you are focusing on partly or wholly on Africa. That's not my animation, and that's not an intention to suggest that working in Africa is a bubble that's about to burst. The key thing is that there are tremendous opportunities. We all know about the grades of copper in DRC, for example. We also know how damn difficult it is to work in DRC, and applies to a lot of other countries. You've got the governance issue, which I'm going to talk about. You've got resource nationalism, and just the energy and the infrastructure challenges, and so on of working in these countries. So let's look at some of the challenges quickly. How am I doing for time? Yeah, I've got a bit. Some of the key impediments to improving governance. Now, these guys in Africa and elsewhere, suddenly the world's eyes are on them, and you and others are in there exploring. For years and years, they've been neglected. They've been colonially dominated. Their resources have been exported. There's been very little value added, and understandably, they feel impatient. And so they've had limited benefits so far, and what's tending to happen is that they want to get on with it, and so they jump in and link up with the first person, not first person who comes in through the door, but the best connected, and who promises them the goods early. And we all know this is a long-term business. There's straight corruption, which is there's some signs of it improving in some areas. I'll talk about that a little bit in a minute. And lack of government capacity, which is genuine. I mean, some countries, they really do want to do the right thing. They just haven't got the ability, and they tend to have rings run around them by some investors. So what do you need to do? I mean, this is a little bit like motherhood, and it's all very well to say it. How do you do it? But it's worth listing it. Build government capacity, transparency, which is absolutely key, rule of law, and stability of investor rights. Which is crucial to getting the exploration volumes up. As I don't need to tell you that. For the government, wise revenue distribution is key. I mean, the biggest effort on that so far probably is the Chad Cameroon oil and gas pipeline, where there was the revenue management agreement with the government, which was fairly recently torn up, as they put their money into military expenditure because of the Darfur situation. But efforts continue with that. One can't stop trying because this is absolutely key. Spend on the infrastructure so that you can get the resources developed, and on key items to make the economy sustainable. And this is a very important one, which I think companies who dash in and maybe make an investment agreement when the government is weak and hasn't got the capability. I mean, they're just storing up trouble for themselves. There are contract reviews going on in DRC and going on in Guinea and elsewhere around the world. Now, on this transparency point, some of you may know about the Extractive Industry Transparency Initiative, which I think was Tony Blair's brainchild or somebody in DFIDS, but as was picked up by the international community and is being supported heavily by the World Bank Group. While it is just about transparency, it's not about management capacity. It's very important. Once you get transparency coming, it should encourage, the rest. It won't do this. It won't build government capacity or fix the discipline, but it sort of brings the spotlight of public opinion. And, the good thing is public opinion in Africa and elsewhere is getting more sophisticated. And it's getting better educated, communications are better. So transparency is a good thing. It's a first step, it's a prerequisite, but it's a very important one. And in Africa, it's quite encouraging. 16 of the 23 candidate countries which are EITI candidates, which simply means that they subscribe to the EITI principles, which is transparency, publish what you pay, and I can talk a bit more about this in the Q&A if people are interested. That they subscribe to these principles, and then you go ahead and you do an EITI report, which looks at how the companies have performed and the countries have performed. Have the companies published what they pay? Where has the money gone? Has it been used sensibly, and so on? And there have been 10 reports to date, as you see, several in African countries. Not necessarily ones you would associate with particularly high levels of governance, but it does mean that they are, at least some parts of government are making an effort. And I think Norway, as to lead by example, has formally adopted EITI as the first developed country to do that, and that's where the EITI Secretariat is based. There's a lot of talk, as you know, about China and Africa and India and Africa, and there's a lot of debate going on that, which I find fascinating. And what we're trying to do in the World Bank Group and the EITI is to work with China and sort of say it's in your long-term interest to improve transparency and governance in your operations in Africa, because you want to be a good neighbour and you want people for you to stick around. And so we're sort of pushing that message hard, not only to China but to Brazil, which is very active in Africa, and India, which is becoming increasingly so. Now, some implications for the investor. I mean, all that is very much policy, government level, which you guys should be very interested in, but there's probably not a lot you can personally do about it. What can you do, and what can you be concerned about? I mean, the uncertainty, legal and regulatory framework, which is true. Security of tenure, is somebody going to grab the concession? I think this is not a lot of help in a lot of these countries, but the resource curse, which one hears about, if you can avoid the resource curse, that is an unbalancing of the economy, a disjointing of the economy, a hollowing out of the industrial sector. If you can avoid that, obviously the population at large in the country is going to be more well disposed towards natural resource development. It seems clear. I mean, this isn't shown, but the common link is good governance, and between that and fiscal stability, which is what you guys want, And the countries which have got good governance have tended to avoid the resource curse and probably offered fiscal stability. And some examples come to mind of Botswana, Chile, Ghana, and to an extent South Africa. But as I say, that's an interesting link, and it's something that we can point out when we're talking to to host governments. Again, it's probably not a lot you can do about, but it's something maybe for you to look at when you're looking at different countries and country risk. The investor, what can you do about it is, if you're having challenges at the government level, as you well know, you need this. You need to work with your local community. The jargon is a social license to operate, but that simply means being a good neighbour to the surrounding communities, to your mind, and so on. Now, you need that really. We feel this, very, very strongly in IFC. You've got to have that as prerequisite to go forward. But if you really build a very good relationship, if the national government starts giving you a hard time, it will be, interesting, how well the regional government can protect you. I mean, we'll have to see how it evolves, but I think, Peter Hambro and Aricom in Russia are probably an interesting example of that. They, like others, their share price has been beaten up like crazy by the Russia risk. So far, although they've had their problems, the fact that they've developed a very good relationship with the Amur government in Amur province in Russia, I think to some degree gives them some soft cover against perhaps government interference. And also the other example is the Chukotka, the Kupol mine in Chukotka, now operated by Kinross and before by Bima. I mean, that is a world-class gold deposit. Russia has its policy on strategic minerals. Kupol hasn't been attacked yet under that policy. It's probably no coincidence at all that Abramovich is governor of Chukotka and has probably thrown some protection around it. But we're involved in that, and we satisfied ourselves that there's not a corrupt link there. And the fact that they're able to develop it and they're now into full production, I think is a very interesting picture. And Bima originally acquired that largely because they'd done a really good job on the Giulietta mine, which wasn't an easy one, but where they developed a very good relationship with the local government. And I mentioned this as the example down there. And the other one to mention in Africa is Guinea Alumina, which was originally done by Global, who did a remarkably good job on developing relationships with the local community. Right, thank you. So look, I'll just spin through the rest. I think you know a lot about our role on this, and I'd be very happy to take Q&A and talk about this later on. Working with the local community, generating links with the local community. Very good example is the Ahafo mine, Newmont in Ghana, where IFC is providing loan financing and helping them, and they've got the PKC, which is 19 employees, half of women, increasing its production capacity and supplying back to the mine. And this is just the sort of commercially sustainable linkages one wants to go for. I won't go through this, but this lays out it a bit more and talks about the environmental performance standards and how important they are. And the Equator Principles. Later on down the road, when you're trying to get the financing, especially in this difficult market, if you've got standards which are high, you're going to find it easier for these banks to provide you money because they do subscribe to the same performance standards that IFC does. I haven't left enough time to talk about resource nationalism, but it is an increasing problem. It's not really something that one can do a lot about, so I probably won't dwell on it now. But I think the key thing is that there hasn't been a huge amount of expropriation. There's been sort of creeping adjustment to terms in plenty of places. But as you know, the UK does that with North Sea oil as well. So it's not just Africa. I think the key thing though, which governments have got to watch about not killing the golden goose, is that so many of them, because profit-based fiscal terms are difficult to administer, they tend to go for revenue-based fiscal terms, which is simpler. The problem with that is that when prices are going up, the government take goes up related to revenue, but if your costs are going up as well, the investor gets squeezed. And I think that point is often not appreciated. What you can do about that is be very transparent about your costs and your project economics with the government. and do it really on the basis that this is what it's going to cost for us to develop it. We're going to be very open with you about it, and this is what our profit margin is. And if your tax take is this, it's okay. If it is that, it isn't. You know, have an open dialogue. You know, comes back to the transparency point. Value of a strong partner. Of course, you know, we bit self-serving. We think IFC can be a good strong partner. But what I want to emphasise is that what you want is a long-term partner who's going to look through the current situation. I mean, our bias, and we've talked to a lot of our clients, potential clients about this, is don't rush to list. Find some seed capital investors and early investors who aren't in a rush to list, but are prepared to see this business as a long-term business as it is, and we'll stay with you. It can be a strategic partner if you need technical and management support, but it can also be a long-term financial partner. And you know, we can play that role and also help on the environmental and social side, as I've explained, and on the governance side. Recent examples, we're working with Lydian Resources, who are listed on TSX. Their share prices got beaten up like everybody else, but we're staying with them, and their results are looking pretty good. Aracom being hit by the Russia story, but you know, we're staying with them, and we're hoping we'll help them mobilise bank financing for later in the year. It's going to be a challenge, but we're going to try and do it. And we are getting quicker, but you know, you can read about this and you can ask me about this, and some examples of you know, that we can provide the full range of financing. And I'll just spin through to this map. You know, I talked about the frontier, and you know, this is the point. This is not an outbreak of measles in Africa. This is our offices in Africa. You know, very very well covered, and you know, that's us here in London. And you know, we're well represented out in Central Asia as well, which is perhaps the other obvious frontier. And I didn't bring enough business cards today, for which I apologise. So if you get a copy of this, that's how to contact us. Thanks very much.
Thank you very much, Chris. Excellent talk. We have got 10 minutes or so for questions. Now, can I ask you to take, because we're recording the whole proceedings, if you could give your name and affiliation when you're asking a question. So, first question.
Hi, Carmen Story, Clarity Capital. Just wondering if you could give any advice or any of your commentary on exploration going on in Zimbabwe. What you feel the situation and the outlook could be there? Thank you.
Yeah, an interesting one. I don't think we've got a better crystal ball on the Zimbabwe situation than you have. I mean, I think we, like everybody else, were. You know, one can argue to and fro about Mbeki's departure, but I think his departure at this stage in the negotiations is to say the least unfortunate. Let me just tell you what IFC's formal position is. Zimbabwe is still a member of IFC, and I don't know, he's still got a presence, but anyway, we cover it from Johannesburg. We've got some investments there, not in natural resources, oil, gas, or mining. We are not doing new business there. I mean, our portfolio is non-performing and so on. So we've got a formal reason for not doing that. We would, if the situation genuinely improves to the satisfaction of us and to our key shareholders, and I don't need to spell out who those are, we would be in there very quickly. And we are talking to, I think, at least a couple of clients who are either, you know, holding positions there or, you know, planning to move back in. And I mean, this is a general message. If the Zimbabwe situation clearly improves, please come and talk to us if you want some partnership going in there, because we'll be very active. But quite what's going to happen? I mean, I'm desperately hoping things will break through, but I'm not sure how optimistic I am.
Thank you.
Thank you, Mark. Good morning. Martin Ross at Alexander Mining. Could you tell me the total amount of money that you've invested in the mining sector and what the typical size range would be for the investment?
Gosh, the total number. Sasha, can you help me? I don't know it. I mean, we've been investing in mining since 1956 when IFC was formed, and it's several billion. Our current portfolio isn't that high, and we only did about last year. We only did about 30 million, and a similar amount the year before. Primarily, certainly not from a lack of effort. I mean, we here in London, we cover oil, gas, mining, and chemicals. I think we're spending 75 to 80% of our time trying to increase IFC's portfolio in mining, because we do see it as a key part of our business. But it has been very difficult to close deals the last few years. Our typical, first of all, as I showed briefly, we can provide investments right across the risk spectrum, from pure equity through to mezzanine debt, through to senior debt and syndicating senior debt. On the equity side, I would say, particularly, looking at this audience, take an example, Lydian Resources, very early stage investment. Our first exploration, our initial investment was $2 million. Now that's very much at the low end, but we've subsequently invested more in them, and we would go. At the other end of the spectrum, the largest equity investment we have in the mining sector at the moment is LondonFinex, where we hold 35 million of equity, and we have an option to take that up to 50 million. Now, maybe we'll be investing in LondonFinex or Xstrata. I mean, who knows where that's going to end up. In between the two, I would say, looking at this audience, one's probably talking on the equity side, 5 to 10 million range, maybe 5 to 15, maybe 20 in some cases. We hold 20 million in Aracom, for example. We've got an option to go up to 40. We hold 30 in Peter Hambro. A couple of other examples. On the debt side, we will only take 25% of total project costs if a project's being developed, or 25% of the company's capitalization, whichever is appropriate. But our big role is to syndicate financing with commercial banks or co-finance with them, and that can be for the total debt requirements. There's no upper limit, and in fact, the more we can mobilize, the more we can syndicate, the more we like to do it. And then on mezzanine debt, one example was the Kupol project in Chukotka, where there was a 400 million senior debt financing put in place. We took a small slice of that senior debt, and we underpinned it with 25 million of mezzanine financing, which was a subordinated convertible loan.
Bob Foster, Stratex. Thank you, Christopher, for the presentation. Thoroughly enjoyed it. From the IFC's viewpoint, and looking forward with commodities, do you have a view about specific commodities that would be your investment target in the years to come, next, say, 2 years?
I think the quick answer is no. I may as well make one quick point. We do struggle a bit with uranium. For perhaps obvious reasons. That's nothing to do with commercial reasons. That's some of our board members, but we are reviewing that all the time. I mean, obviously, if the financial world is in for another year or something of turmoil, let's hope it isn't, but if it is, I mean, gold, obviously, may be a safer one. Although I think, in the long run, I'm not sure about that. I think in terms of which commodities we would go for, I don't think we would try to pick commercial winners too much. We would, though, much more look at where the resource is likely to be on the cost profile. Is it likely to be in the lowest quartile? So, given price uncertainty, is it likely to be able to perform? And given the cost pressures, which I mentioned, I mentioned briefly. And I think it's more that we would focus on those areas. I think that things like aluminium, for example. I mean, if you can find a source of very good bauxite and a source of stranded power, given the cost pressures from energy and so on, you can probably do very well, though you're never going to make spectacular returns on things like aluminium. And then at the other end, you've got things like gold. I'm I'm a long-term optimist on platinum and precious metals, because I think the environmental story is very good on cars. Obviously, platinum's taken a hit at the moment because of the downturn in car sales outlooks. But I think that's very much a cyclical thing, and I think the structural potential is good, providing substitutes, so there's no breakthrough in substitutes.
Any more questions?
Rob Weinberg. The IFC's entry into greenfields exploration is a very recent one. What sort of criteria do you use for your involvement in this sector?
Well, interesting question. I mean, it's not that new. It depends what you mean by greenfield, and that probably addresses your question. We won't, both in oil and gas and in mining, we won't really go in for pure wildcat exploration. That is, in the case of oil and gas, an unproven basin. We would like to see a basin where it's proven presence of hydrocarbons. Similar analogy with mining. I mean, just a mineral anomaly which hasn't been assessed and so on. But I think the Lydian case is an interesting one. They got some very interesting properties in a property in Armenia, which they're now drilling. But when we invested, there were no drill holes in it at all. It was fairly well defined structure, but the basis of geochemistry and a little bit of geophysics and surface sampling and so on. But they did have some more developed properties, but in Kosovo, where it's quite a major. And this was even before the recent developments on independence in Kosovo. So that's probably the earliest stage we would go. Having said that, we did invest with BHP on their Aeromag operations, looking for kimberlites in kimberlite pipes in Botswana, which I think is probably the earliest stage ever. So it's really a combination of how strong is the sponsor, how well it's defined is the concept, and can we make a case for for a coherent story with reasonably near side upside. But we've got a very open mind on this, and we did make to answer your question, we made a specific decision to move back down the exploration cycle 4 years ago, I think.
Well, Richard, I was intrigued to see that you had 64% of EM companies working in Africa, because we have a session tomorrow entitled Africa Irresistible or Still the Dark Continent. So I think you've answered that. So anyway, thank you very much.
Yeah, thanks, Graham.